Hey guys, this video is going to be a quick tutorial on how to read and understand your escrow analysis statement. I know it's that time of year, so a lot of you all are getting these statements, and I'm getting calls because a lot of my clients want to know why is their mortgage payment changing and how do they read this document that they've received from their mortgage company. So let's start with the basics. First, your escrow analysis statement is going to come from your mortgage company once a year, usually beginning of the year. So around February-ish is often when you'll see it in the mail. The purpose of that statement is to let you know where you stand with your escrow account. Now, remember, an escrow account is where you make payments to your mortgage company monthly that they set aside for you to be able to pay certain expenses for you when those expenses become due. Typically, many of us have our taxes that are paid out of our escrow account. We have our homeowner's insurance paid out of our escrow account. And for those of us that have mortgage insurance premiums that are paid as well, those are paid from the escrow account. So those monies are sent to the mortgage company, but the mortgage company does not keep that money. In order to make it convenient for you so that you only have to make one payment instead of several, as you're paying all of the expenses for your home, they take it, put it in an escrow account, and then when those monies are due, they pay it on your behalf. So that's what an escrow account is. So in order to let you know what's going on with your escrow account each year, they do this annual review where they go in and they say, okay, this year, this is what we've collected from you for your escrow account, and this is how we spent that money. And if there are any changes that need to be made for the coming year to make sure that you have enough money in that account, then they'll make adjustments. If you had too much in the account, they'll send you a surplus check. So when you get that statement, a lot of times it's going to have a real detailed breakdown of what happens. The statement is typically broken down into a few categories. First, at the very top, of course, all of your identifying information, and then it's going to have a breakdown of your payment. So that's usually near the top of the form where it shows you here's what your payment was and here's what your new payment is. And it does this side-by-side comparison so you know what to expect, right? You know what's coming up this next year. And then they do a projection of how that payment is going to be allocated over the next year. So again, it's typically done in a chart form, shows every time you send in X number of dollars as your mortgage payment. So you send in this particular amount of money as your mortgage payment. A certain part of it goes towards each item that you're going to be paying over the course of the year. So it'll show that whenever you put money in, oftentimes the mortgage insurance comes out every month. So that comes out that same month. So you make a payment of, let's say $1,800 in, and then that same line item, often they're paying the mortgage insurance premium because that's paid every month. Now, everybody doesn't pay a mortgage insurance premium. So if you don't have a mortgage insurance premium, you won't see that, or you'll see a zero there. And then it shows what's left. Then it shows with each payment as things are paid out. So your homeowner's insurance is paid out usually in one lump sum each year. So one particular month, usually around the anniversary of when you bought your house, that homeowner's insurance is going to be paid once a year. So you'll then see that large lump sum coming out from the balance that's in your escrow account. Same with taxes. With each tax bill that they receive, you'll see a large portion coming out that's being paid towards your property taxes each year as well. So you'll have, when you're looking at your monthly expenses for your escrow account, you'll see you paid in January, you paid in February, you paid in March, you paid this much in April. And the amounts that you're paying in is the amount that you're sending in for your mortgage payment. Then it'll show in the next column what you're paying out. So again, out of what you paid in, X number of dollars goes to your mortgage insurance each month. Then it'll show what you have left in the account based on what you paid in and what was paid out and what's left. That balance will continue to accumulate. So each month the balance gets higher in your escrow account. And then when it's paid out, you'll see a large line item deducted for, again, homeowner's insurance and again for your property taxes. So it'll show you what that's going to look like over the next year. You'll also have a section that shows what happened in reality over the past year. And this is where you can identify whether you paid in too much and then you have a check attached to this statement, or you paid too little and they're now saying now we have to make an adjustment because we didn't collect enough this previous year. So to correct that, we're going to have to increase your mortgage payment. If you have a fixed rate mortgage and your mortgage payment is going up, it's generally because of your escrow account. Okay, so because your rate, if your rate is fixed and you haven't made any changes to anything as it pertains to what you owe on the house, then the actual payment that the bank keeps, that part stays the same. But your mortgage account, your escrow account could fluctuate from one year to the next based on how much those bills are each year. With your homeowner's insurance premium, remember, you can always shop your homeowner's insurance premium from one year to the next, just like you shop your car insurance. If you've noticed that your homeowner's insurance premium has increased or increased drastically, you may make a phone call to your insurance company to say, hey, let's look around to see if we can find a better priced homeowner's insurance because it's having an impact on my budget. And I've noticed my mortgage, the amount that I'm sending to my mortgage company has increased. With taxes, remember to file your homestead exemptions if it's a property that you occupy, to manage your taxes, and also protest your taxes yearly. You usually only have to file your homestead exemption one time when you buy the house at the beginning, but with the property tax protest, you can do that every year. And that's a way to manage the property taxes so that those don't get away from you. So going back to that escrow analysis, after they do the breakdown of what happened in reality this past year, they're going to give you an explanation based on what happened. Here's what we had to do. Either we lowered your mortgage payment because you paid too much and here's a surplus check, or we increased your mortgage payment because you paid too little and here's the difference. If you paid too little, they'll give you the option to just add the difference to your mortgage each month so that you can reimburse your mortgage company for the extra they paid. If you don't want to have it added, then you can write them a check and just pay it in one lump sum. But in addition to adding the amount that they were short this past year, they add an additional amount because now they realize that what they were collecting was not enough. So in essence, you're getting the payment, the difference for the shortage added twice. Once to pay them back because they paid the taxes and the insurance at the previous year. So now you got to pay them back for what they already paid. And then again, so that they have enough at the end of this year. Now, the good news is if there's a shortage, once you pay them back for the year that they already paid, then the payment should adjust again the following year, because now that they've gotten their money back, you can go back to just making a payment for the upcoming year. I hope this makes sense, you all. I know it can be very complicated trying to understand these escrow analysis statements. I get the phone calls all the time, so I get it. If you have any questions, feel free to inbox me and I can help walk you through that. It's more helpful if we can go through it together. So if you inbox me, don't be surprised if I say, hey, let's hop on the phone, because it's easier to understand if we're looking at the document that you're talking to. So as always, I'm Keisha. I am always here to be as helpful as possible and to provide as much information as I can about you and your real estate transactions and your real estate business. So if there's something else that you need, don't hesitate to call.